right, ladies and gentlemen, hello and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is the first of the last official summer month. So yes, welcome everybody. Today's Friday, and well, we have a big Friday ahead of us. We have a lot of data. We have the tariffs, the new slap of tariffs. We have NFP. We have some other important economic data, so stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen. So we have a special Friday. It's the last trading day of the week. It's the first trading day of a new month, of the last month of the last month of summer. And of course, in terms of economic data, honestly, you name it. We have NFPs. We have the tariffs that came in, economic events, let's call them, So we have the tariffs that came in. Today is the first. I mean, if you remember the deadline, but is it a fair deadline? No, not really. Then we have the EU CPIs that are coming out as well. So we'll take a look at those. Yeah. Honestly, the main event will be the NFP, of course. So we'll keep an eye on that one. We have the ISM manufacturing PMI as well. Don't forget about that one. So a little bit of a market mover there. So look, before we jump into all that action, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to do my usual good morning in the chat room. Good morning, everyone. So I hope everybody's having a wonderful start of Friday and a wonderful ending to the week and a wonderful start of a new month. Look, also, what I wanted to say here as well, that also, yes, quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Now, look, ladies and gentlemen, this session is about interaction. So if you have any questions, feel free. That's why I'm doing this one live. I have my other little videos that I do, like just a separate piece of analysis, but this one is kind of meant to be a little bit more interactive. So hopefully, I can encourage you to maybe ask some questions if you wish, and if I can answer those questions, I'll answer those questions. If I cannot answer those questions, well, I'll tell you that I cannot answer those questions, but I'll try to get back to you with an answer later on. Nikkei 225, ladies and gentlemen, in general, what we're seeing right now is a little bit of an interesting moment that we're going through. Of course, if you saw, excuse me, if you saw this morning the news, the headlines that some major countries received some tariffs, and yeah, it was a bit of a moment here. Look, there's a bunch of stuff happening, honestly. Like, I don't know even where to start, but probably I'll have to start somewhere. Look, first of all, let me actually, start with Nikkei. What I want to do here is I want to start off with the technical picture. Now, look, previously I talked about, I'm looking at the main index, not looking at the cash index. I'm looking at the main index right now just to see where we have ended the week. And the week was a little bit of a negative one for Japanese Nikkei here. Look, some interesting levels have been met. A few adjustments have to be made here, of course, as well. But some levels have been met, some levels held nicely. I was talking about this area right here, this highest point of December of 2024, and we somehow managed to stay above it here. We did decline, we did correct a little bit lower, but eventually we remained on the upper side. So also, if we do try to if we want to do if we want to draw a nice little upside line right here as well, then you can say that, hey, look, we held nicely above this one. But you know what, I mean, because all these trend lines are a little bit on the tentative side, I would say. So, you know, just that's why it's a little bit of a tricky moment here, I would say. So yes, we can refer to them. But do we actually trust them that much? I don't know. I don't think so. I think that, you know, there are some other things that we can trust a little bit more. Now, look, for now, long story short, for now, I would say this way, that I'm still somewhat positive on Nikkei here. I think that there could be some more upside to come if we do continue to trade above this steeper upside line, which was drawn from the 13th of June. And again, this upside line is a tentative one. I get it. However, I'm trying to find some sort of logic here, and also maybe this 40,000 kind of 400 zone, which, like I said, is the highest point of December of 2024. If it holds, if we stay above it, then certainly there is a kind of a possibility, a nice possibility here for this one to travel to the all-time high, which is around the 42,426 here on this chart. Because if you look at this picture, you can see that last time we were at all-time highs was back in 1989. Yes, it took us a little bit of time, I would say, you know, not a full 30 years to get here. But yeah, it's okay. You know, like you know, we got 25 years roughly or something like that. We got here to this point. So okay, we surpassed that area. We surpassed that area, by the way, back in 2024. So yeah, 25 years took us to get to this point right there. And now the question is, can we go for those higher levels? You know, is this a new chapter of higher levels for Nikkei 225, or is it actually something to keep in mind that maybe we'll see, you know, a double top here? But again, it's not a picture perfect one, but nevertheless an interesting moment. Look, as we know, Japan and the US did strike a deal last week, and they did do so. Initially, it seemed like the biggest deal that happened. It was 550 billion, you know, of goods, of U.S. goods that Japanese government was willing to purchase and is willing to purchase. Also, adding 15% tariff on Japanese goods exported into the U.S. So, I mean, and then the U.S. doesn't get any tariff. You know, doesn't have to buy anything from Japan, so because it already kind of buys. So yeah, it's an interesting moment, of course, that we're living through. As I mentioned before, that these tariff effects, these shocks, I think that they will be felt later, because this is why the Fed is not really willing to go for those rate cuts yet, in order not to kind of worsen the situation. Because let's face it, if we do apply rational expectations in general, the human being kind of needs around a year to realize that there's a problem, you know. So that's why we're waiting because this whole show started in April. I mean, we have half a year, we're almost half a year through it, yeah, you know, we then will see what's going to happen next. But for now, of course, it's the tariffs. You know, these are the tariffs. Yes, somebody might say, oh, it calmed down already, you know, but no. That now the whole show will start to see, you know, what's going to happen next. Are we going to get some sort of you know, higher inflation and stuff? But look, coming back to Nikkei, I would say this way. Also, let's remember that this yesterday the BOJ came out with its interest rate decision. They kept the rate unchanged because, look, they were kind of in favor of hiking, but what they're trying to understand is, like, if the stock market is just going to start correcting itself lower, and you know, with the Japanese yen will get picked up automatically. However, the problem right now is the US dollar is rising. So what's interesting is that the tariffs, or should I say, the US dollar started rising after the majority of like the big contracts have been done. So listen to this. Oh, by the way, Flix FN, I can see you there. Thank you very much for the comment. I will respond to that in a moment. So coming back to this point, what I wanted to make is that, look, you have your cheaper dollar, you know, you have your lower dollar. Initially, we saw, by the way, let me just jump into that DXY very quickly. There we go. So, you know, you have your initial kind of drop here. You know, everybody was kind of, you're trying to make U.S. exports more attractive to the global arena, to the global market, and suddenly you strike all these deals. You know, everybody will be now committed to purchase your products, and suddenly from the U.S. and now suddenly, you know, you're lifting your U.S. dollar, and it's pushing to the upside, and it becomes a little bit even more expensive for those. You know, for those countries abroad to purchase your goods, and they, in a way, they cannot say no because they're kind of already locked in with an agreement. So, you know, you're kind of getting screwed double time, and that's where, like this, a very interesting moment comes in. Of course, we'll see what Japanese BOJ is going to do. Or Japanese BOJ in general, not Japanese. It is the you know, it is the Japanese one. Anyway, so we'll see what the BOJ will do, because at the moment we have a government in Japan which is kind of mixed a little bit, and there recently, two weeks ago, they had the elections where, you know, a liberal Democratic Party came in, and basically they're a little bit more pro cutting rates. So, you know, to strengthen the Japanese yen with the help of higher rates, I think that this is where the issue could arise. So normally you would say you know, the other tool that the BOJ has is just the market sell-off, but that is not happening yet at a severe level. And another thing is that, you know, which one will it be? The US dollar, the safe haven, or the Japanese yen, the safe haven? We'll have to just wait and see. Flix FN. So when is the tariff going to happen? Right. Okay. So there are mixed things happening in general, mixed announcements. And this morning, from what I kind of understood, it's all over the place. There is no clear guide on, you know, that there's no like one date for everybody. No, now it's like some countries, for example, for Canada, they raised the interest rates, you know, because up from 25 to 35. And of course, it's all politically driven, politically motivated, because, you know, because Canada came out with a statement that they will recognize the state of Palestine, which is a good thing in a way. And basically, you know, the U.S. didn't like that because, you know, they need to sell more weapons. Hey, now we're seeing this, you know, this kind of revenge, political revenge, you know. So we're, you know, and they're getting slapped, and their tariffs should come in, like, should go into effect straight away tonight. And yeah, that's insane. So then you have then you have other countries, Asian countries, that are getting the tariff today. They're having that you know, 15 to 20% tariff, but they have a 7-day kind of window in a way for that extra negotiation. You know, this is what I saw in the news today. And because, again, honestly, if you start reading this, it is getting confusing. For example, China, US and China, they have the 12th of August. So, but again, you know, I strongly believe that the CAN will get pushed again. You know, we're looking for another maybe 90 days or something like that, because with Mexico, they were supposed to get the tariff today as well, but they got a 90-day extension. Let me just confirm that. So yes, Trump granted Mexico the 90-day retrieve on higher tariff. So basically another 90-day extension for Mexico. I mean, okay. Then we have Let me just double check. Double check very quickly. Okay, so then we have the de minimis exemption order. Basically, the law, the legislation, which basically allows low value imports under $800 to come in into the US without any tariffs. This is where basically it was a niche for all your, Shane and Temu companies, and that's why they were kind of, they were able to use that. So up to 800, there were no tariffs. Now there won't be. So it will take into effect from 29th of August. So you see, that's what I'm saying. It's all over the place. It's all, the EU have already a deal. Basically, EU is going on a spending spree, but I don't think that this is going to be is going to be an easy walk in the park for for Brussels, because look, you have to still agree with all other, or should I say all other countries have to still agree with what you have promised the US, because what you promised the US is 600 billion of worth of US dollar goods purchased, 600 billion US dollar worth of, what's the word for that? 600 billion 600 US dollar billion. My brain today is going down. 600 billion worth of US dollars purchased goods. That's the way. Anyway, so that's for how much they're willing to purchase the to make the investment into the US, basically. Well, through purchases of US goods. And also, in addition to that, on top of that 600 billion, you have 750 billion US dollars worth of goods purchased, of energy goods basically purchased. So in other words, not goods, I would say it's energy. So you're buying gas, you're buying oil, and that cost is spread out 250 billion for every year in 3 years, basically until Trump kind of gets, remains in power. So, and then, after the presidency is finished, then I think that they will start renegotiating again, and maybe some of the things will get cut off or something again. But it's very interesting to see how this is working. Of course, it's all politics. It's, at the moment, everybody's trying to please the US. However, I'm really curious. I'm with Powell in a way on that, and I'm really curious to see what's going to happen, what kind of implications it will have on the US inflation. By the way, Flix here, is trading London session safe from the potential tariff announcements? No, nothing. In terms of London session, these are just, in a way, totally different things. You're trading the market. The market is affected by tariffs, so it doesn't matter. You trade it there. We're talking about, it depends on which instruments you trade, and it basically means that you're kind of you're increasing volatility. It depends on which product you're trading. So if you're if you need more volatility, and you're trading something like pound related stuff, then of course you're trading it during the London session. But again, it depends against which currency you're trading it. Maybe if you're trading GBPJPY, maybe it's Asian session that is better to trade that. So it's that has nothing to do in terms of that. You're not protected. Tariffs are all over the place, and they're all over almost every instrument. It's not the session that's important. What I keep on saying, what's important is the risk management. So it's your exposure and how you approached it. So I would say, it really depends. And by the way, Flix FN, which instruments are you trading? Out of curiosity, and then maybe I'll put a little bit of emphasis on those instruments during this session right now. Just let me know. By the way, jumping into China, look at this beautiful drop here. Of course, Asia is worried about all these tariffs that are happening today. The uncertainty, because like I said, it's a crazy world in a way, and it's a one-man show. And the one-man show is running the whole world. you know, I don't know. And look, I don't blame that one man. I blame the others who are kind of complying with that, because you know you know, I understand fear is one thing, but you know, one day, like, enough is enough sometimes. Anyway, so long story short, for now, looking at China 50. Look, China has at the moment, let me just double check the tariff that China has. China has around, they have 30% right now. Yes, but they have a deadline to negotiate a deal up until the 12th of August. However, the question is, will that happen? Because again, yeah, I think the can will get kicked. I think China is way too big of a, you know, trade partner to kind of mess around with. Why? Because your all your rare earths are coming from there. You know, you need China, so you cannot really, you can play hard to get. You can play, you know, tough, but eventually, at the end of the day, China needs US, US needs China. Very simple. I don't know. Like, I mean, honestly, this. But okay, we understand. I understand. We need a show. We need a show. We need a show of power. You know, that your kind of your voice matters. You know, that's the world we live in right now. Anyway, so coming back to this, of course, the market is not taking this nicely, and we're seeing a decline. Look, I talked about this last time, and I said that if we do break this upside line, I'm going to go a little bit to the downside. I'm going to target my 50-day EMA, which we got perfect test off. And now, if we clear that, our next target is the 100-day EMA, together with this upside line drawn from the low of the, let me just adjust this, low of the 6th of May. There we go. Yes. And then we'll take it from there. Let's jump into the US indices, ladies and gentlemen. Yeah, so yeah, what I'm looking at here. Let me just double check what's the, okay, so this is this and this is that. Okay, right, so Dow Jones Industrial Average, the US market. Now, by the way, FlixFN, let me know, again, like I said, let me know those instruments that that you're trading on, because I'm curious, what are your, you know, what's of interest to you. But look, yesterday, the market didn't feel the love. Honestly, it started selling off. I think that the whole tariff thing is spooking the market a little bit, and we saw a nice decline after we've almost reached the all-time high. Look, on the cash index, we did reach an all-time high. Let me just jump into that chart. So on the cash index here, we did reach an all-time high. On the main index, no, we did not. And this is where the tricky bit comes in. So this right now, what we're doing right now, we're forming something of a range here. So we're moving kind of sideways here. And this is where I would not rush into things. Certainly, let me just adjust a few arrows here. So basically, for right now, if you want to be a little bit more on the careful side, then we need to wait for a pop of the 45,073 territory right here. If you're looking for some lower levels, then a drop below the 44,000 zone. I think this is what's needed in order to get comfortable with lower areas. At the moment, we're stalling. We stalled a little bit above that. And if we do continue to slide and we fall below that psychological 44,000 zone, ladies and gentlemen, I am leaning towards some much lower levels. And if I apply my Fibonacci retracement from the lowest point of April to the current highest point, actually not the current, the highest point of July, then we'll see that the 23.6 sits perfectly near the psychological 43,000 zone. And this is what we could reach, what we could end up reaching basically if we do drop and stay below the 44,000 zone. So keep that in mind, ladies and gentlemen. Again, like, we were at a very interesting spot. We were near the 45. What I would like to see here, maybe another like a little rebound here, push back up, maybe, like I said, forming something of a range here. And then I would say I would like to see a clearance. Okay, again, the market doesn't always give me what I want it to give me, but you know, wishing doesn't hurt. For now, long story short, of course, The option here for a move lower, the probability for a move lower is a little bit probably on the greater side because we're closer to this barrier, but again, I'm not excluding a rebound as well. S&P 500, so beautiful, look at this. And okay, with this, when something like this happens, I am actually becoming a little bit more bearish than bullish. Why? Because look, I said it before and I'll say it again. Whenever we go and create a new all-time high, but at the same day we fail to stay above that previous all-time high, that for me, and this happens, like a big sell-off happens like this, I mean, for me, this is a bit of a bearish indication, to be honest. So long story short, let's see what's going to happen. Certainly the S&P, right, we're right now in this kind of in this earnings season at the moment, so we are waiting to see what's gonna, what other companies will deliver. By the way, we do have we did get Apple yesterday. We did get Amazon. Amazon disappointed with their operating profit. Apple showed good results. Again, let's see if the market does not bring it down. Just basically, the stock itself is okay, the company itself is okay, but the market conditions, if suddenly the markets turn south, maybe it could just drag Apple after it. But today we have some oil giants, Chevron and Exxon, coming out with earnings. Given the recent jump in oil, and in general throughout this quarter, the few jumps we had, big ones, so let's see if those did impact the figures, the results, the company results. But for now, looking at this picture on the S&P 500 from the technical perspective, I would say I am leaning towards the downside. I would like to see a drop below the 6,336 territory in order to get comfortable with further declines, and by further declines I'm going to aim for this little territory right here around the 6,201 200 zone ish. I think it's a good target, good level, and let's keep this one in mind. For me to get comfortable with the upside, well, at least a push back above the 6,409 zone is required here, and but ideally a push above the current all-time high would be better, probably, so this way we could examine some higher levels. NASDAQ, very quickly, NASDAQ did decline as well yesterday. However, companies like AMD did rally initially, did show good results, but then started selling off very quickly. NVIDIA as well, look at this. Meta kind of stayed around because they showed good results this week. Microsoft, by the way, they showed very good results, and then boom, this is what happened. So this is very, very interesting. Look, I mean, this is the all-time high. That is the all-time high. Look at this rally that we had for the past 4 months on Microsoft. I mean, at some point they will have to reverse back down, don't get me wrong, but in general, wow. Look, coming back to the situation here with all these tariffs. Look, somebody keeps on saying that that it's a good thing for the U.S. In a way. For certain parts, I would say yes. If you're trying to increase production inside the country, maybe we could advocate that it could be beneficial for some. Again, not all, for some. But because U.S. economy is such a consumer economy, and they consume a lot. They create a lot of waste, a lot of because from that consumption. So. But basically, the economy is really strong in that sense. So you're determining your economy by your consumer, and the U.S. consumer is strong. But the thing is that do you have the infrastructure, all the necessary things and tools to kind of do all this growing, this production inside the country, and is it in general cost effective? Now that's probably the starting point of everything. Is it cost effective? I mean, is it going to be worth to make those factories? First of all, who's going to work, right? You're at the moment kind of getting rid of illegal migrants, and well, let's face it, a lot of those illegal migrants actually work in those low-skilled jobs, and they get paid low because they're illegal. They're, but they still work. So, there was always a purpose why you didn't want to make them official, because again, yeah, it's the labor force that you needed in order to be competitive, in the market, so that for example, your produce would be competitive still. And this is the thing. So, and at the moment, I mean, who's going to work if you find a skilled workforce, unless you want to attract more people, more skilled workforce into your country? But then again, you need low skilled workforce as well. Unfortunately, that's how it goes, how the economy rolls. And you're getting rid of it. You're kind of scaring off. You're this whole immigration, what was it, ICE, this ICE called immigration, I can't remember what's the word for that, like this US, what's the title? Immigration and Customs Enforcement, there we go. So with all those actions that they're doing, they're kind of scaring off people in general from, coming into the country, which in a way that was one of your goals, right? But who's going to work unless you do have, some sort of a plan for getting in labor force? Maybe you're going to, increase more people behind bars. Maybe you will, you will force them to work because they're in jails, and you have manpower in there. Maybe, but we've seen that already happening. So is it ethical? I don't know. We'll see. Anyway, look, coming back to the situation with NASDAQ here, and coming back to the tariffs, yes, we're seeing those slaps of, tariffs and everything, but in the background, majority of those have an extension. So Mexico, only Canada, from what I read right now, from those that kind of did not negotiate a deal, a proper deal. Those, countries like Canada are getting, their tariffs kind of starting from straight away, and I think that's the only country because the rest of the Asian countries, as I already mentioned, get 7 days delay, and then probably another delay, and and I think the can will continue getting kicked, and certainly then we'll see. In all this kind of craziness, I would say, it reminds me of the Trump's book, if you have read it or not, but just a second, let me just find you that one. Basically, it's this book right here. So yeah, so it's an interesting read. Is it like an eye opener? No, not really, but it's an interesting read. Can't say anything. So the art of the deal, and it cannot be more relevant than it is now. So yes, ladies and gentlemen, you can have a read through it. Not advertising here or anything like that. It's just that, something that kind of remembered in my head from way back. Anyway, so coming back to the situation here, look, we're seeing a decline. Yes, the next big thing that you need to keep an eye on today, of course, is the NFP. Now, NFPs, I did a piece on NFP, and let me just show you what I'm talking about here. So I did a piece on NFP on the US job numbers this week. So this is what I did already. I did it recently on Wednesday, and basically what we're watching today, we're watching the non-farm payrolls, which are expected to come out a little bit lower than the previous. Of course, there are mixed signals, mixed messages, somebody saying that it's going to be actually higher than the previous. Okay, look, I mean, for those who are watching this right now as a live session, let me know what you think. Is it going to be a higher number than the previous? Not the forecast, but the previous, or a lower number, and just kind of randomly, put it in the in the chat box and let me know what you think. So yeah, that's what but you can have my perspective on that. If you can watch this little video here that I did specifically on the job numbers this week, because just this week we had we're having not only NFPs. On Wednesday we had the ADP, which came out on the lower side. Where's that ADP? Where's that ADP? Come on, ADP, there we go. Came out on the higher side. JOLTS was on the lower side. JOLTS came out on Tuesday, and those came out lower than the previous, lower than the forecast. So yes, this was on the lower side. And what can I say? It's an interesting moment. I keep on telling everybody, do not try to gauge ADP with NFP. There is no major correlation there. No, it's totally different. But looking at the NFP number, let me just open up the chart here. I just want to mention this briefly because I have other instruments to go through very quickly. But you can watch, like I said, you can watch my video on the job numbers on YouTube. Basically, we have been since around 2021, we have been on a gradual decline, and this is what's worrying. And if we are applying technical analysis on this chart, then we can see that we fell and we continue to sit below all my EMAs here. So if like I said, this EMAs can be applied here, we're sitting below it. But of course we don't do it this way because it would be a little bit misleading. Anyway, but what's also interesting that how the norm of every year it has been dropping. So if it was, let's say, back in 2021, we were around 600, 700, something like that, right? Then we dropped into 2022. It was already around 400. Then we were dropping in 2023. 2023 was around 250. We're dropping in 2024, it's around 200, kind of 2025, it's around 150. So you can see the problem that the NFP continues to drift lower, but unemployment is starting to pick up. And this is what I said in my video, so you can check it out. But unemployment, yes, has been slowly ticking up, and the NFP is slowly drifting lower, unemployment slowly ticking up. Again, not that pessimist or anything like that, but of course it is a worry sign. So keep your eyes on this. I mean, if we start seeing some worrying signs, let's say people are going to start talking more about inflation, and we will actually see that, because at the moment it seems like everybody's quiet about it. But to be honest, real inflation is a thing. I think it's already here. I think it's already getting more expensive for everybody. So it doesn't matter which part of the world you are in. It gets expensive every year, but somehow this year feels a little bit different. So DXY, we're hitting that 100 mark, and I talked about this. I looked at this previously. I said, look, we're probably in this nice little inverted head and shoulders pattern, and this is what I was kind of looking at. So we had our left shoulder, head, right shoulder, boom, we pop. So I said to you that I'm going to aim for my EMAs, the 100 and the 200 day EMA. So far we've reached one of those, and I will stick to that game plan as long as we stay above this 99.39 zone right here. I will continue targeting the upside, and I'll aim for that 200-day EMA. The German index DAX, look at this. Boom to the downside, ladies and gentlemen. Boom to the downside. We are crazy selling off. it is a bit of a nightmare here, I would say. Look, we're falling below the 50-day EMA. The question is, are we going to stay there? Look, we might stay for a few days, like we had similar thing here, but going into next week, that's where it's going to be interesting. If we can somehow get back above the 50-day EMA here, shown as the green line, okay, I'll consider a bit of a move back up here. However, if we struggle with that 50-day EMA and we struggle to get back above it, well, ladies and gentlemen, I think we are opening the door towards the 100-day EMA, which currently is around, on my chart here, currently around 23,268. That's not the cash index. This is the main index. And this is what I'm looking at right now. And it is quite interesting that what we're going through. Keep your eyes on some European economic data that's coming out today. So we have the flash inflation numbers, so the estimates, and the of course the forecast right now is on the lower side from the previous 2%. That's, I'm talking about the headline year-on-year figure. The core is expected also to decline by 0.1%. Look, with the European numbers, most of the time they come out as expected, and there's, it's only interesting when they deviate a lot. Now that's fascinating to see, but you don't get those very often. But if we suddenly get this one, hey, we'll go from there, ladies and gentlemen, because if inflation comes out on the higher side, for example, if it actually ticks back up back to the previous, because the forecast is this, but if it remains as previous, this could be a little bit of a bad moment here for DAX. We could see further declines, to be honest. The FTSE 100 selling off. Yep, beautiful. After reversing lower here, and again, the same story played out. I talked about this. I said to you that whenever we go for an all-time high, but we fail to stay the same day, we fail to stay above that already previous all-time high, that to me is a little bit of a worry signal, and I think there could be some negative implications, but certain confirmations are still needed. A drop below the 9,058 territory right here could do the trick for a few more sellers. We're currently in this little range, and if we clear one of the sides of that range, then we'll consider next short-term directional move. Let's jump into gold, ladies and gentlemen, into the commodity world, and I'll jump into currencies after that. Look, gold is it is struggling right now. It tried yesterday to push higher, found resistance near that 50-day EMA, and to be honest, I'm still leaning towards the downside on this one. I'm leaning towards this little area right here, around the 3,245 zone, near the 100-day EMA, because what I'm looking at here is I'm looking at the range overall. Before I was looking at a triangle. That didn't work out. That's fine. That's why we adjust. And now I'm looking at this as a range. So let's see if this is gonna test the lower side of the range and stall there. It's going to be quite interesting. Silver. Silver is at an interesting spot here as well. We are looking at this picture here. We're looking at the 50-day EMA. Look, you know what I really want to do? You know what? Let's start fresh, because this is way too many lines. So after we found this peak here, the highest point of this year so far, 39.52, we started correcting lower. We are testing the 50-day EMA, which is fine, absolutely logical. Now the question is, can we actually drop below that 50 EMA and start traveling towards the 100 and the 200? These are going to be my targets, but I'm not going to rush into anything, because I think that this is going to be the first interesting target. This actually, let's draw the arrow this way. So the 35.29 zone-ish, because maybe the 100-day EMA could, by the time it could reach this area, the 100-day EMA could approach this, and all the stars would align perfectly, and we could have ourselves a nice little, hold up here. U.S. oil, of course, look at this beautiful rebound here. Look, OPEC Plus is having a meeting soon, so we are expecting increases in production. So in a way, there should not be a reason for oil to jump like this. However, Maybe there's something happening in the on the political side, and maybe, you know, it's the jump kind of maybe attributed to the 10-day deadline that the U.S. has provided Russia with, the, you know, in order to finish the war. I don't know. Like, I mean, if they don't, then what? So it's a kind of a, like I said, you know, it's an unclear moment. So yes, the market took it fearfully a little bit. So we saw oil rallying. However, the question is now, you know, if we're going to continue to trade above the 200-day EMA, to be honest, I'm in the short run, I'm leaning towards the upside. But overall, I'm still bearish. I'm gonna, you know, if people, you know, I'm gonna stop being bearish when we start clearing these trend lines, these downside lines. Then I'm gonna start. I'm gonna stop being bearish. But for now, if we continue to trade above the 200-day EMA, I'm continuing to the upside in the near term. But if we somehow fall back below the 200-day EMA, ooh, now that's going to be interesting. And I'm going to, let me get rid of this. I'm going to consider a move a little bit to the downside, ladies and gentlemen. And then we'll just, yeah, take it from there. Natural gas, we're at a very interesting spot here. We're near key support. So hey, this psychological 3 level is holding nicely. So if we can drop below the psychological 3, I will go further south. Platinum continues to slide. Let me just refresh this. Continues to slide, continues to correct lower. After a major rally we had, let's apply our Fibonacci. Let's see where we could go next. Ooh, very, very, very close to 38.2. Good, interesting. If we clear this, I will go towards the 50%. I'm gonna, because my 50% is coinciding nicely with my 100-day EMA. I think it's a good option here to consider. For the upside, a push back above the 1,343, 45 zone, something like that, could do the trick for a few more buyers. Sorry, it was platinum. Palladium is also correcting lower. It's also on a nice move here to the downside. Fibonacci, there we go. Again, getting closer to my 38.2, so I'm going to keep that on the chart for now. So I think I'm going to aim for this one. So platinum, beautiful decline here. Palladium, also beautiful decline. Not as much maybe, but I think it could end up traveling to that 38.2. Copper, ladies and gentlemen, I did a big piece on, well, a little piece actually. I did a little piece on copper here on TradingView, and this is the one. You can check it out here. You can have a look at this video. And I talked about this, and look, with copper, the situation with copper is this, that initially in the beginning of, or middle of July, they come out saying, oh, we were going to put, 50% on all copper imports. Right. This explodes to the upside. Why? Because everybody rushes to purchase copper and to bring it into the US and basically to kind of, put it in, at the levels that they can still purchase it at. Then this week, after the Federal Reserve, they come out saying, "Oh, you know what? We're not gonna do the 50% on copper. We're only gonna do semi-finished copper products." So basically, if your copper scrap metal, which you use in production, basically that's not going to get the tariffs anymore. So everybody who rushed to buy and already are expecting their the shipments, everybody now has a problem. I think what I've read recently was that they brought like a year's worth of copper into the country, and so the problem now is storage. Like, where are you going to store that? And this is where the costs for those companies that purchased copper, their costs are going to increase. Okay, not from the tariffs, but from the holding costs, because now they need to get rid of it. Now copper, they're going to be selling copper, and the copper now is at lower levels. So in a way, you're kind of, you know, you're hitting those companies really hard. Not only that the price has dropped, but also because they probably purchased copper at higher prices as well. Like for example here, and not only that they need to sell it now at a loss, and also they need to pay for warehousing and everything like that. This is, wow, talk about market manipulation. Anyway, so ladies and gentlemen, let's jump into, you know what, let's actually go into the Forex world. AUDUSD, beautiful decline, beautiful drop here, and I think for now, as long as the US dollar remains strong, and as long as we stay below all my EMAs here on the daily chart, I'm going to continue targeting the downside. Aiming where? Well, there are a bunch of levels here, but I think that these are the more credible ones, 0.6373 and the 0.6344 zone. So somewhere around here, that's what I'm going to be aiming for. AUDJPY. Look, now this is interesting. This is our risk on, risk off monitor, and let me get rid of all the drawings here. So after we cleared some of these levels, 95.75, and we cleared the 97.43, so we're currently stuck in a range here. So we need a clearance of this range. We need to see a move either above this this barrier, this 97.43, or we need to see a drop below the 95.75 territory, and then we'll go from there. Long story short, for now, I am watching this one. It's a nice range. So hey, let's see what's gonna happen next here, and then we'll go from there. So so yeah, that's my little game plan here on AUDJPY. Look, the indices are falling off a little bit, so but I'm not seeing AUDJPY dropping, you know, dropping off the cliff. We're waiting to see what's going to happen here on our risk on, risk off monitor. AUD, and where's that AUDNZD? This one I wanted to pick up on. AUD became stronger recently, rebounding beautifully from this 200-day EMA. This needs to be marked here. So 1.0990 zone here. I'm watching this one. If we are looking for some higher levels, I think that this is the barrier to watch. Let's jump into USDJPY. There we go. Beautiful rally, continues to push higher. We cleared this barrier, the highest point, the previous highest point of July. So at the end of July, we traveled and we hit a new high for July. So now today, for August 1st, we're, you know, trading here. I actually, you know what, I think it's better to mark this. So this is the 151.15 zone is the one that I will be carefully monitoring here. So yes, this is my barrier together with this actually level as well. So this 151.1530 zone, I think this is a good target, a good area to watch for now. USDCAD, of course, not loving the whole Canadian tariff thing, you know, but what can I say? At the moment it's moving, it was already moving to the upside. I mean, you know what's interesting, that the oil market is not really helping here the Canadian dollar. It's not really helping it to strengthen. So it's, I think this one is a little bit more political. So for now, I will continue targeting the upside on this one, and I think we could end up towards maybe traveling back to that 1.40 zone, the psychological one. A USDCHF, beautiful test. There we go. Let's see if we can break this eventually. I mean, we can actually, we were breaking it already, but let's see if we can stay above this downside line, and then we'll go from there. EURUSD continues to slide. I mean, it's not the week for the euro for sure, and look at this. Boom to the downside, ladies and gentlemen. And yeah, EURUSD here is just falling off the cliff, and we're falling below the 1.1440 zone right here, this 23.6. So in a way, the next target is the 100-day EMA and maybe the 38.2. Let's see, near the 1.12 territory. EUROJPY, beautiful rebound yesterday. Look at this. Beautiful move back up. However, am I going to get very bullish? No, because my bullishness will come on a push above the highest point of July. Near the 173.90 zone. For the downside, again, the same story, just to be a little bit more on the safe side, on the cautious side, 169.73 zone is the one to be watched. GBPUSD very quickly continues to slide. So far, so good. Let me remove all the drawings. And again, I'm targeting the 200-day EMA here, shown as the white line, because it coincides nicely with my hurdle here, the 1.3140, which is the lowest point of May of this year. Let's jump into the crypto world, ladies and gentlemen. Bitcoin, there we go. Look at this move here. I mean, I talked about this a lot, and I will do a crypto update today, and basically I think it's perfect timing, because look, we were trading between 116,000 and 120,000, and this is what I talked about this week in my Markets Talk webinars. And I said, and last week I talked about this as well. I said we're in a little range. We need a clearance through one of the sides here in order to consider, the next short-term directional move. And well, there we go. We are getting the clearance here. And what I'm going to say here is that I'm actually leaning towards the 112 zone right now. I think it's a good target. I think it's not far from this upside line as well. So let's see if we can reach that, because if we can, then the question is, can we rebound from this territory? Bitcoin Cash, beautiful move to the downside. But on my chart, actually, you know what? Let me just jump into Markets.com charts very quickly on this one, because Bitcoin Cash here, I have this. There we go. This is, I think, a little bit of a better picture. And this is a rising channel. We tested the upper side of it perfectly. Now we're drifting back down. What's important for me here is that we're falling back below the 563 territory. I spoke about this. So yeah, I'm gonna continue targeting the downside. Ethereum is moving nicely to the downside as well. A little bit of profit taking, in my opinion. Let's see how far we can retrace. So if I draw a Fibonacci, not from here, but from here, we can see that we could actually end up traveling back to that 23.6, and we did test that level before. So good potential target. Let's see if if we can clear that area. In terms of lower levels here, a drop below the 23.6 here is the one that I am really interested in. Ripple, yes. Ethereum, like I said, good area here. Ripple falling. There we go. We're falling below my psychological 3 level. I talked about this on Wednesday, and I said to you, if we do surrender the 3 zone, then yes, I will lean a little bit more towards the downside. And so far, so good. Litecoin, beautiful, 106.60. I talked about this level as well on Monday and Wednesday. There we go, falling nicely. My next targets are the EMAs right there. And those are kind of below the psychological 100 level. Dogecoin, yep, beautiful. Already tested the EMAs. Let's see if we can rebound. But if we cannot, certainly, yes. A breakout here could lead to some lower levels, maybe even all the way towards this upside line right here. Because in general, the whole crypto mania is fading away, because I said to you on Monday that, look, we had the bills last week. We had the 3 bills, the 3 acts passed, the crypto acts, the Genius Act, and this other one, what's the name for that? Let me just quickly remind myself again. Crypto Week. So the Genius Act, the Clarity Act, and the Anti-CBDC Surveillance State Act, and all these were passed. And look, we were rallying prior to that. So it was a clear buy the rumor, sell the news moment, because I said to you that maybe there is going to be the same story as with January, when we saw, this big rally in cryptos, and everybody was like, oh my God, during the inauguration, he's going to say something about cryptos and it's going to blow up. And it did not. Because why? Because everybody was in this anticipation, but then, yeah, reality hit, and just kind of a nice little correction back down. Polkadot, similar story, drifting lower. Look at this. I mean, just drifting back down again quietly. Nobody's talking about this, but it's very, very interesting. And finally, Tron. This one I like the most probably at this point because it's very technical. So far, we're still somewhat bullish because we're still above this upside line. So Tron is kind of a different animal. It's behaving a little bit more like a currency, to be honest, but okay, we'll see. But long story short, we're near this upside line, and to be honest, it would be actually nice to see this one correcting lower, much lower. Maybe we could end up, you know, traveling somewhere here, something to this area, and then we could, you know, pick it up from here. Around here we have the 100-day EMA, which could provide a bit of support. So let's see if this is going to happen or not. But you know, Tron looks a little bit more like an investment product than for example Bitcoin or Ethereum. But again, you know, it's more like Tron, although it's not a stable coin, it looks like a little bit more of a stable coin here. But anyway, it's just my opinion. But certainly it has the, you know, all the opportunity to drift lower, and let's see if we're going to have that. But at the moment, yes, we're testing this. We're very close to this upside line. Let's see if we can rebound from it. Ladies and gentlemen, that is a wrap. That is a wrap. So I would like to thank everybody who joined, who watched this one, and all, you know, the flicks. Thank you very much for your comments. I really appreciate that. That helps a lot. And yeah, everybody, I would like you to be careful today because we have a very volatile day. Not only that we have the economic data, we have the earnings. We also have just in general the first day of the month. Oh yes, and to sprinkle on top of it is like sprinkle it with tariff, you know, tariff nonsense. We're, like I said, we're in this moment right now, so let's see what's going to happen. Certainly an interesting moment we're going through. Let's see if we can adjust, you know, to the markets very carefully, you know. So stay safe as always. I keep on saying stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you on Monday. Thank you very much, and bye-bye.